Hiren Ven joins us now, and we're interacting with him in a while. And Hiren, when markets were going up, you were hibernating. When markets are down, you've come out. So I think it's a good day to have you back. I'm going to start. I'm going to start with a very basic question. As a money manager, would you buy the fall, or you will like to wait it out?
So the short answer is that I would buy the fall, but I would not. I mean, I would take my own sweet time to accumulate, because when you have an event like this where the outcome is relatively uncertain, you're not very sure whether you will see an immediate snapback. My sense is that the markets will give you enough time to buy, but certainly as a money manager, I would use this opportunity to buy, but I would not hurry. I would go in slowly and steadily.
Hiren, is this risk or is this volatility? Can you decode it for our viewers?
It is both, actually. It is certainly volatility for sure. It is risk to the extent that, this is not something where, I'm hoping that this is something which will probably have an impact on 1 or 2 quarters of economic activity and probably may have impact on earnings. But we've seen these kind of phases before. And I think that eventually you do come out of events like this. So I think the risk is only that there is no visibility of how deep this impact is going to be over the next 1 or 2 quarters. That there is an impact is without any doubt, but the impact will be different for different sectors. And you don't know the second order impact of what is happening, right? I mean, people don't travel. If, there are some businesses, people don't travel, orders get, postponed, decisions get postponed. You don't know what hits you where, at what point in time. I'm not trying to be alarmist, but it's just that the risk comes from the fact that there is no near-term visibility of when this will settle down and when economic activity will start to pick up again.
Morning, Hiren. So then, do you think when we do start to see markets stabilize, it's going to be back to that same handful or dozen or so stocks that have continued to outperform so far?
Well, I think I think whenever there is uncertainty, people tend to flock towards names where the visibility and quality is the highest. It's only when things settle down substantially, I think that there will be a rotation. So I think it's, we've seen one move where small and mid caps outperformed in January and February, but it happens in stages. So you may see that they may be on the sidelines for a while, consolidate, correct. And, once the dust settles down in a quarter or two, things will probably in the broader market start to look up again.
Hiren, what we've seen in last 3 days is that FIs have sold rather relentlessly, and domestic institutional investors have really put their best foot forward. Given that where SIP flows are, PMS schemes like yours, they're getting inflows, that's what I've been told. Do you think the fall, in a sense, will be relatively less for India because A, crude is down, and B, there is local availability of cash?
Yeah, I mean, certainly, there is domestic liquidity which will to some extent cushion. And I think that at least in India, there are no reported cases. So, I think to that extent, I think in relative terms, we should be better off. And yes, there are benefits to be had because of lower crude and lower raw material prices for some sectors. So that should be a benefit to us, but we are not immune. I think if money moves out of passive funds, it is going to impact us as well. But I agree with you that I think there is enough domestic liquidity on the sidelines, which to some extent may be circumspect at this point in time, but at some point in time should come to cushion the fall as well. Because people are looking at an opportunity to invest at lower levels. And I think this opportunity is going to be as good as any that you would want.
Chat early in the morning, and good to get you back on television channel after a gap. Ravi Dharamshi, good morning. How are you feeling this morning?
Good morning. Hopefully not bad.
Okay. So, Ravi, the question which we are asking everybody is one simple question. Will you buy the fall or you will wait it out?
So I think the single biggest reason why the markets are falling is that the markets had gone up. I know it sounds very, very childish to say that, but whether it is coronavirus or whether it is Bernie Sanders' nomination, those are all reasons that we tell ourselves that this is the reason why markets are falling. So the fact of the matter is that markets had rallied a lot, and Indian markets had actually rallied way less than US markets had rallied. So to that extent, I think your previous question was that relatively we should do better. I think I would also hold the same view that relatively India should fall less. We have less leveraged positions, and also the fact that the macros are turning actually in our favor with crude falling, interest rates being low, and some amount of supply chain disruption in China benefiting India in the medium to long term. So that should relatively hold us in the good stead.
Okay. So, Ravi, would you call this current move more along the lines of risk or volatility? What would you attribute it to?
Sorry, it would be what?
Risk or volatility?
No, clearly it is volatility, and volatility can push the weak hands out, the late hands out. So I believe in a lot of mid-cap and small-cap segment, stocks had just rallied last few months, and we had just started factoring in some amount of recovery in the market, which was probably, in the economy, which was triggered by corporate tax cut. So to some extent, we have started questioning again, whether this will delay the recovery, the nascent recovery again by a couple of quarters. So is this a black swan event that, the world did not notice? So as long this risk remains an unknown, till then, yes, markets can surprise on the downside. Once it is known, and I'm hoping that is pretty soon as the summer sets in everywhere in the western part of the world, hopefully the coronavirus should die a natural death, and the volatility and the valuation should come back to a reasonable and attractive level, which will bring the long-term investors back into the market. And in hindsight, we will be talking about this as an opportunity that we would have, ideally like to buy. But whether that is now or 5-7% lower from here, I cannot say.
Given that growth has been precious even before this episode, we had very concentrated market, 15, 20, you would say 50 stocks, they were going higher. Now that growth will be challenging more, do you think whenever recovery will happen, the same DMarts in the HDFC banks of the world, perhaps in Kotak and Reliance, that's it? I mean, the life of the market will be restricted to 30, 40 stocks?
Over a 3 to 5 year period, definitely these are not the stocks that are going to give return. And I mean, from a 3-6 month point of view, the trend might still continue, but they are factoring in a lot of future. Surely that is not where the puck is going to be. That is where the puck has been. So you have to think of, you have to look for places which have been ignored for long and which might see a small revival. I mean, even a small revival can give a much better return in those kind of spaces rather than these leaders that have been the beneficiary of passive flows as well as, risk averseness.
Ravi, we've had a good start to the year. 15,000 crore has come from investors, foreign investors. We recovered very smartly post the budget day sell-off. Do you think, given that how economies are likely to move globally, whether it's coronavirus or whether it is, US presidential impact, there are a lot of events in the second half of this year. Do you think, are we in for a lost year for equity investors?
I don't believe so. We have had 15,000 crores come in, but if you move back the needle for the past 2-3 years, we have had constant outflows. And that is what gives me the biggest hope that it's not like foreigners are overbought in India or we have had too much of euphoria or we have had too much of leverage. We have actually been in a deleverage mode, whether it is at corporate level or at market participant level. And the leverage cycle is yet to begin for India. So I don't think we are in a where the entire year can be washed out. I don't think that kind of a scenario is my base case at this point of time.
Your elbow instinct, please ask Ravi, what will you buy in the fall? That's Abba's question, not my question, Ravi.
No, I think still you still don't want to go with companies that are stuck due to leverage. You still don't want to bet on a turnaround in terms of balance sheet. You still want to bet on companies which are probably struggling with growth and maybe a little bit of margins. The P&L issues can and will be sorted over a horizon of 3 years. But balance sheet issues, if they have not been able to sort till now, it will be very difficult for any company. So as a general, I would still go with companies where there is no risk of balance sheet.
I'm glad that you could accommodate this interview request. The pre-open rates, what are they telling you? Well, that's Hiren Ved and Ravi Dharamshi, both very smart PMS fund managers.